mic, there's nothing there, so I wasn't able to select anything for the mic, and we've been trying to troubleshoot that. So what we did was, I'm talking through Richie's telephone, her cell phone, and she's holding it up to the speaker. So, does it sound okay? Okay, good. Hey, Stephanie. You may hear beeps every once in a while, and that'll be our cell phone people calling us. So, anyway, so there's a lot of stuff I could cover. And my son came up yesterday, and then last night he and I stayed up late watching the first season of Billions. He had never seen it before, so I didn't really get anything like prepared. I would like to have some time to actually put together like some bullet point presentations and things like that. But there's quite a bit of information to cover about this, what's going on with oil. And I've been following this in 2014 when China and Russia made a oil treaty between the two of them, bypassing the U.S. dollar. So there's a lot that you have to understand that goes back and understanding the connection with all of these things and how they're all connected, and how one affects the other, and how does that affect us. And back in 1971, Nixon closed the gold window. And what happened is the gold window was before, well, you used to be able to, way back when, probably in the 30s, I'm not sure when they closed that gold window for U.S. citizens. I think it might have been in the 30s. But you used to be able to take like a $20 bill and go and exchange that $20 bill for $20 worth of gold. But they closed that to U.S. citizens, but they left open. You could trade, if you were a country, or and you needed to buy lumber or oil or whatever commodities for your country. If you purchased dollars, you could exchange those dollars in for gold, and we would pay that country gold. Well, Nixon closed that gold window in 1971. And what happened is Kissinger went down, and I can't remember the other guy's name or whatever. They went down to Saudi Arabia and they said, "Listen, we're not gonna invade your country and steal your oil and overthrow your country. We're gonna, but we're gonna let you. We're gonna protect it. We're gonna protect the oil has to travel, on these, oil tankers, and we'll protect your oil fields from being invaded. And so, but you have to sell it in dollars." So that's where the big OPEC thing started, and everybody, if you were a country and you had to purchase oil for your nation, you had to actually purchase dollars to do that, and you still do. Countries still do it, and they do it, and so they have these treasuries. Anyway, that's the whole thing. Getting into the treasuries and all of that. That's a whole topic in itself on the oil. But in any event, so these countries have accumulated a lot of dollars, and they have a lot of dollars in reserves. Now, so you say, well, what does that mean? There's a lot of things that because it strengthens our the world reserve currency standard that we have had since 1971, when Nixon closed that gold window. So what happened when China and Russia made this deal? That was like the first step to what I consider to be the death of the dollar coming. Because if China, and if they're bypassing that, which means there's not going to be as many dollars in demand. And then there was another step that was taken, and that was the IMF, the international. You all know what the IMF is, Christine Lagarde. So anyway, China has been trying to get into the IMF basket of currency for a very long time, and they have been denied, and the basket of currencies in the IMF is U.S. dollar, the euro, the yen, and the pound sterling. And so they were turned down, but in October 1st of 2016, they allowed Chinese yuan into that basket of currency. Now, you say, well, that's a pretty, they're actually legit, their currency becomes more legitimate, so to speak, by making that, by the IMF making that happen. But also, there were all of these things that were taking place. China started they had the BRICS nation. They formed this alliance between Brazil, India, Russia, China, and South Africa. It's called BRICS. And just think about the raw commodities that those 5 countries have. It's astonishing. And, Russia is actually the largest exporter of oil and energy in the world. They're bigger than the Middle East. And China is the largest importer of energy in the world. So their partnership made perfect sense. But by them not using the dollar was like, wow, that was, a pretty big blow to the dollar. But it didn't really, it didn't really affect it at that time. Nothing really happened to the dollar. It was, we had actually a big rally on the dollar. But that BRICS nation was just, if these things all happen in steps, nothing happens, it's just not like overnight there's going to be this massive change. But then also, China set up the AIIB Bank, which is basically equivalent to the same thing of the IMF. And I think about 140 countries joined. I haven't looked recently of how many countries joined, but we're not a part of that IIB Bank that China has set up. And what was really interesting was Japan put in their application to join, and I'm sure that they got a call from the Federal Reserve here in the United States. They probably had a little talking to them, and the next day, Japan withdrew their application to join. So that's a pretty big isolation of the United States from that IIB Bank. So all of these moves, and then also too, it was reported from some sources in London, these gold bullion brokers, that all the gold was moving out of London into China. Everything was going east. And so then what happened was, then they set up a Shanghai exchange to trade in the yuan. So basically, everything has been denominated in dollars. If you wanted to purchase oil, it's denominated in dollars. 95, you all know what the price of oil is, or when you go to the pump. So that's around the world. But gold was the same thing. It's been priced and denominated in the U.S. dollar. So when they opened the Shanghai exchange for the first time, gold is now priced in the yuan. So instead of being priced in the dollar. So that happened a while back last year. And then there was, this was just announced that China was going to have a futures contract for oil, and you can convert it. It was convertible into either gold through the Shanghai exchange, or you can convert it into the yuan, or you could convert it into any currency. And that's huge, because if you are a country and the United States puts sanctions on you, well, you can't go out and purchase oil, but now you have a means to bypass all of those sanctions. So that's just a big deal, and they're going to, supposedly that they're going to release this new futures contract at the end of the year, but Jack told me he talked to some clients in Chicago, and it's going to be after the first of the year. I don't know. They're having a meeting, the big 5-year meeting right now, so that's kind of really important. But this is not good for the dollar. By it's giving means to basically circumvent having not to purchase these dollars, as many dollars as that they have in the past. So, the thing is that I could go, we just have to wait and see, how this is going to affect it. But, you just have to be able to read the tea leaves and understand. So you're not like caught like a deer in the headlights when something dramatic happens and disrupts some markets. These things are actually being played out. They're done in gradual steps. And so that's the thing is this oil contract that China has set up, has kind of put a nail in the coffin for the dollar, I think. Now, has it closed the coffin? How far? Is it dead? I don't know. That hasn't happened yet, but it's something that I think everybody should, if you're trading, should pay attention to, because it's very important to, it's going to affect, I think, our economy at some point, but when and how much, it's yet to be seen. But it's definitely something that every trader should pay attention to and have that on their radar screen. And, as far as the futures for trading the futures out of the CME, the futures contracts, they roll every month. In the middle of the month, they roll monthly. Like the indexes, they roll every 3 months. But, our crude oil rolls every month. And, I could do a whole, I didn't put together a presentation on trading crude oil, so I need more time, and I'll put together a really nice bullet point presentation on that. But I just wanted to highlight today, what these things that are occurring. You're probably not going to hear that on CNBC. Maybe you'll hear them talk about it just like a bit or whatever. You really have to dig for this kind of information, because a lot of it isn't put out in front of everybody, but it's there. You have to dig for it. And so that's pretty much it that I wanted to talk about. That. Does anybody have any questions?
Wow, so it sounds like we're closer to the U.S. losing its reserve currency status more sooner than later, it sounds like. Is that part of the equation that you're illustrating there, Angela?
Yeah, well, if you connect the dots, it's kind of where the dots are leading.
Yeah, it sounds like it.
And here's the thing. In 2014, there was a G20 meeting in Australia, and what happens is these basically it was after the crash, they formed this financial stabilization, conference, which they said the G20. But basically what happens is these leaders go and they show up. They don't know anything about economy, to be honest with you. They just do what they're told by these central banks that have been running everything. So the central banks initiate policy at these meetings, and then the leaders just go and rubber stamp it. And what happened in that meeting was very to say the least, I thought was another nail in that coffin that you were talking about, Ricky, because Barack Obama understands that you and I are no longer depositors of a bank. We are now creditors of a bank. That status has changed. So when the bank collapses the next time, it's just going to be like Cyprus.
Mm-hmm.
They can come in and take 30% of what you have in your bank account. So that was kind of something that I thought was very not dollar friendly. Actually, why would they take that? I know. Yikes is right. So you really have to pay attention to these things because they make these little tiny increment steps that are leading somewhere. Now, when that's going to happen, I don't have a crystal ball. I trade futures because I don't have a crystal ball. But, there's these moves, and that are being made that are looking towards that. And China, here's another thing that happened. China, when they got turned down to join the IMF, China owns over $1 trillion of our debt, of our $20 trillion that we're in debt for. And we have over $100 trillion of unfunded liability as Social Security, Medicaid, Medicare, right? So, that's a huge unfunded liability that the U.S. has, over $100 trillion. So anyway, what happened is China started dumping treasury through Brussels and through Euroclear. And what was really interesting, when they started dropping those treasuries, it was a signal to the U.S. like, hey, we could wreck your market in a second. If they started dumping the treasury bills that they're holding of our debt, holy cow, it would be over in no time. But I think what happened was the United States has the secret arm to our treasury, which nobody knows about, which is called the Exchange Stabilization Fund, which was started back in the 30s. And that's a whole different topic right there. But they had to actually buy those. But we had to purchase back our debt. Either the central bank did it or the Exchange Stabilization Fund, but somebody pushed that because those markets, when that was going on, you would have seen a big move in our treasury and in our bonds, and nothing moved. So somebody was buying that back. And so, yeah, there's a slippery slope there of what can happen.
Wow.
I know. I know. So I always have really great hearing there for everybody today.
Well, thanks, Angela. This is really good. I think it's all stuff that we all need to hear about.
Yeah. Well, see, here's the thing. I know these things. I've been following these things for years, and these are things that, but it doesn't frighten me out of getting along this market. No, because this market is manipulated. And if you think you know where this market's going, you're sadly kidding yourself, because nobody knows where this market's going. I can't tell you tomorrow where this market is going to be. I can tell you that under certain levels, I would take a position one way or the other based off of, the price action of the market. But making predictions of where this market, nobody can do that, because they can drop this thing 50 points, tomorrow morning on the open. Does anybody know that that's going to happen? No, but it could happen. So as a trader, you just always have to be really prepared for just about anything to happen. But in the meantime, if they're taking this market off, which is completely manipulated up, they got to go up with them. And when they take it down, you go down with them. But you don't try to fight them, and you don't try to pick top, because they could take this thing all the way. They could take it another 100 points up.
And I think the real important thing is risk management. Don't put too much at risk. Don't put everything in a single basket or even a related basket. Be diversified. Don't have anything that is so big in one position that if that fails you, that you're going to be wiped out. You know, keep your risks small. Keep them. You don't have to. You don't have to be 100% invested in any instrument.
And that's the best advice. You're absolutely right. I mean, you shouldn't do. And yeah, you shouldn't go all in. You know, and like right now, I recommend gold can be a really hard trade because it has sometimes these crazy swings before it settles down and gets into its rhythm. And you may get in and then all of a sudden take a lot of heat and get out and take a loss, and then all of a sudden it goes your way. And gold can be a really hard instrument to trade. My advice is, if you don't really have a lot of experience of trading gold, is to actually just buy the physical gold. And you know what? Because if the dollar does lose some of its standards of being the world reserve currency, and the yuan is doing this gold-backed yuan, which they've been wanting to have a gold-backed currency. They're kind of doing it, taking a little baby step here by doing this gold reserve-backed future contracts on oil, which is, kind of, so you can see where it's going. But gold could be $10,000 at some point. So it's not like you want to put everything into gold. You wouldn't want to go buy, sell everything and buy gold. But you need to have gold exposure of the real precious metal. Hold it in your little greedy hands. You can sort the paper gold or buy the paper gold. But
Well, that's something Stephanie's definitely been espousing in the room for some time now.
I know.
Not sell everything and buy gold, but at least have some gold in your portfolio.
Because there's going to come a time when gold is going to be very hard to actually purchase, and you're going to want to go buy it. It could be a lot lower where you got in. Let's say you bought it today, and it goes down. Excuse me, and it keeps going down. Who cares? You got some, and you have some, because when it comes by and it keeps going lower, you may not be able to purchase gold at that price. There may be nothing there for you to purchase. So and silver, right? Stephanie. I mean, I had this talk with Stephanie. When did I have this talk with you about this? Gosh, a year ago. I could think if you're going to buy gold. And anyway, but yeah, it's something that's probably that. And the Bitcoin, is you're welcome, Stephanie. Anyways, Bitcoin has been going up, and everybody's like, my husband and we're not married, but we're like Stephanie and Matt. We've been together for 10 years, forever. And Jack runs. He owns 3 companies, and one of them is AlphaCoin, and they actually just had this article that you sent to me. Let me see if I can find it. I have not had a chance to read it. CoinDesk made this announcement on their company, but this is Jack's company, AlphaCoin. I'll put it in there. I haven't had a chance to read this article or even talk to him about what it is, but he sent it to me on Skype, and I haven't had a chance to read it yet. So I don't know what's in there yet. Some kind of trusted software, something. But anyway, their company, they were contacted, or they were contracted by the CME, and the CME is the largest exchange in the world. Dealing with commodities and stock investors, and that's where everybody had their positions or through these futures. Anyway, the CME contracted Jack's company because they didn't have any knowledge in blockchain technology, and they signed a multi-million-dollar deal with his firm to build out the blockchain for the CME to, and with the Royal Mint of London, the Royal Mint of London wants to do a gold contract, and it's going to be done in grams, and it was just for the banks in the beginning, right? You know, and eventually they have plans to expand it out to where people can trade it, but now it's just going to be for banks to exchange these gold contracts through a blockchain technology. And so the CME hired his company to make that happen. So that was a pretty big deal. I mean, they had to get FBI background checks. They had to get, they had to sign massive NDAs with their attorneys. But I had known about it that summer, and I wanted to. I couldn't say anything, you know. And but anyway, but they came out. If you go to CME's website and you go to the London Royal Mint thing and just type in blockchain technology, and you can see what all the stuff that they're doing with that. So that's actually pretty interesting. And so Bitcoin, everybody's like, invest some things. Who knows what's going to happen with Bitcoin? They could come and regulate it, and I don't know. Jeff was telling me something about Washington State outlawing Bitcoin. We didn't have a chance to talk about it because my son came up yesterday, so I haven't had a chance to really sit down and have a chat with Jack about some of the things about Bitcoin. But maybe we could bring him on and he can share his experience with that.
That sounds fantastic.
Yeah, but here's the other thing. The other thing is some news that I have is that Jack also set up a fund, and he got it funded with about $5 million. It's kind of small. It's not that big. And he went to Chicago and hired. You all know what quants are. These guys have PhDs, and it is what funds don't have human trading. They're all, these are all done through servers and databases that are like, right in the exchange or next to the exchange. But anyway, so he hired this quant, and he came home from Chicago, and he goes, "Well, you're going to be running the trade, the system." And I'm like, "Excuse me, I'm going to be doing what?" So I talked to Alon, who was the quant that he hired, and this guy is amazing. He teaches math at the University of Chicago. He was one of the first traders at Citadel, and he said that at the very beginning, Citadel almost went under in the beginning when they started, these big quant funds programs, and everything was automated. So we're going to be doing an energy portfolio, which is going to be really fun to trade. I'm really looking forward to it. And so interesting because it's just when he did that, when he talks to these quants, it's so great. Because it's a totally different way of looking at things versus how we trade. We're you and I, we're like little gnats in the ocean compared to these guys. But anyway, so I don't know how much time it's going to be. I probably the system. They've got they've almost completed the back end. And Chris Knight, who's the programmer that Doug hired to do that, is just one of the most amazing programmers on the planet. I mean, Chris, when he was 15, wrote a chapter in the mathematics book on calculus. And he's one of Jack's best friends. Actually, I worked with Chris when Jack and I both worked at the same firm together. And so I don't know how much time, once that happens, that I'm going to be able to come up in the room. I may not be up in the room as much. I'll try to, pop in and give you, if I see anything exciting happening, let you know. But, yeah, I'm kind of looking forward to having something new to do. Sometimes the S&P can be like watching paint dry.
Well, I think it's just been such a narrow trading range lately. We're so used to, at least those of us have been trading a long time together. We were so used to having $2, $3, $4 moves in the SPY, for example, daily
Yeah.
for the longest time, and then for the longest time, I mean, there's some days that we have, 30, 40 cent. It's just makes for really difficult trading sometimes, and it's non-directional at that. You know, we don't have any good moving averages with any kind of slope. They're all flat.
Yeah. Well, you know, here's the thing. Let me see if I can do a screen share, and I'll pull up the S&P. Hope it doesn't mess things up. Quick loading. I pressed the screen share. Oh, there we go. I got it.
Wow, we still have 75 people in the room. It says it's connecting. So, go ahead. Oh, and here it goes. Is it coming in? There you go. We've got it.
Yeah.
Fantastic.
So this is the December contract of the S&P, and now this was when there was a rocket that was shot off by North Korea, and the market dropped really, like, just dropped out of the sky very quickly. But this is where I got long. The S&P was on August 29th. I think I might have typed yesterday. It was 9. Somebody knows I'm the queen of typos. I have a broken hand, and my keyboard is over to the left side of me, and I just reach over and type stuff. I'm not really, so I apologize for my typos. But anyway, I usually have like 20 things going on at the same time. But in any event, so I saw something here that I have never seen. And it's too, I can't really go into it, but I'm going to tell you something. Something happened here that was big. And anyway, I got long here. And I put on a pretty big size because what I saw, I'm like, well, you know, I'm either going to be really wrong or I'm going to be really right, you know. And anyway, so the market goes up. Anyway, this right here, this is when the roll, for the roll. Traders in Chicago, whenever the contracts would roll over, we would all take some week off because they would bring in the spreaders because they're rolling their positions from September over to December. And it's always a choppy trade. And so, you know, nobody wants to trade a choppy trade. So that's what happened on this week. But what happened was, oh man, here we go. So what happened was, right here, when the market opened there, from 72, there was large institutional buying there. And there was also very large institutional buying at 88. And I took profit at 95. And I took profit again at 05. And the market was sitting in this little nasty little sideways thing, but it was like, but I knew it had to close below 88 for me to actually exit that position. And that's exactly where they took it back to. But it took them a long time to get over there. I was like, come on. I even told Stephanie, I said, you know, my range right now in this market is 88 and 04. I was waiting for a breakout above 04, you know, or put this trade back to 88. I wasn't going to do anything, you know, until that happened. And that's exactly what happened. And I bought the Dow here as well. I got in on the Dow because I didn't put trades on in the Dow on that first position. And anyway, so they came down. This is exactly what they did. They came down. They hit their ADAs, and then they can't get all their orders filled a lot of times the first time. You go, why do they keep coming back down? Because they got to get they come back down to the prices that they want, But they can't get them all the first time when you see that coming back to that price of whatever you have in the buy, because they're going to come back and they're loading up the boat again. So anyway, so then they hit it again, and that's 88. And then it was just basically, and I took profit here at 15. And then I just let the rest run, and then I took some profit last Friday. I was at 55. But you can see what that did to the market. It just was off to the races. And then you have this impulsive move high here, which was based off the ISM numbers. And these funds trade, they put their positions on off of this economic data. You know, they're not just trading in the middle of the day. They're prices that really are, there's a lot of moves in the market that are meaningless moves. You know, if you want to trade them, you can trade them, but these funds don't trade meaningless moves. So anyway, so that was just it. So the market pulled back to about 50% of that impulsive move there and held it. I was looking for 35. That was my big line in the stand, was right here, 35. And we never got it. And if you look at the structure of this last week, it was really perfectly structured. It went up, it made a higher high, higher low. It didn't make a higher high here, but continued to make a higher low. Hit that 53 again, still a higher low. I mean, you couldn't ask for a more perfect structure of a bullish trend extension. And I don't think I've ever seen it that clean. I mean, it was just pretty. I was like, holy cow, it's beautiful. And then on Friday, it went up, and it made a higher high, 55, and they sold it off into the close. And I'm going to tell you something. Somebody had asked me in the room if I thought that was the top. I can't remember, or maybe they private IM things that I thought, well, maybe I should put in the room, because I did not see these big farms, firms selling the farm, the cat, the dog, and running for the hills. And I posted that in the room. Because guess what, guys? They bought a pig on the close to add to their farm. Right there. Stephanie, go back and look at all the prints that popped in. I saw them buying it. And then when I looked over at your screen later, I saw that they just bought that S&P at 254.82, I believe. That's a big line in the stand right there. And they have, they came back to it on Monday and bought some more. And they've been taking it up. So when you see these pullbacks in the market, the market always rebalances back to its winning control. And there's a difference between a market rebalancing and a market selling off. It's huge, and so you have to know the difference between when a market is rebalancing, pulling back to a point of control, or more importantly, pulling back to a point where these big flags want to purchase more inventory. So that's what you have to be aware of and not be confused about it. And so until they have violated that trend and told us that they're over, you can't fight it. Where it's going, I got up here, this is a big target I got, 71, where I think there'd be a lot of profit taking. You could see some big resistance here. It could completely sell off there. I don't know. Or it could completely, next thing you know, next week we could be trading 25.80, you know? But that's the area we need to watch and pay attention to once it gets up there. See what they're going to do. If they're going to hold those prices up. But you know what? We've got great earnings. They're looking for this tax cut. I don't see anybody jump a ship here. So, I don't know. Does anybody have any questions?
It is all good stuff. I'll agree with Stephanie there. I'm not exactly sure where you get your lines, and Angela, on this chart, but just kind of looking at it from a market auction theory standpoint, it looks like we're the market typically is going to go to one of those two lines, up or down, and so it definitely looks like we're not at a top at all.
I don't think so. And the earnings are really good. These companies, that's what these, if all of these earnings came in and they were terrible, I think, you could see a reaction in the market to that. But these earnings are really good.
Well, not just that, but the reaction. IBM, this was the 22nd consecutive quarter that they had declining revenues, and everybody saw what the stock has done.
IBM's been trying to catch up to Silicon Valley, and they just can't do it. They're a dinosaur.
Well, I have to wonder what they said about the blockchain part of their business, because I'm thinking maybe that's what gave them strength today. I don't know.
It's a big. Yeah, they're trying to reinvent themselves.
Well, to that extent, I think we all need to reinvent ourselves on a regular basis. Because technology is changing, the world's changing, and like you said, the currency situation is going to probably change drastically, and very possibly within our lifetime.
Yeah, I very well could. It's something that.
Good night, Tom.
I don't lose sleep over it. But I just, I own gold, I own Bitcoin. I do not trade them. I own them. I own stocks. I do not trade stocks. I own them. And I trade futures. I swing trade, and then I have an automated trading system that picks up these ebbs and flows in the market during the day. It was like yesterday. This is really, because it was literally watching Grandpa's EKG. And I walked in, and I was like, I'll just turn it on. Because I didn't turn it on yesterday. Because I saw that the volume was so low, and the overnight was holiday type of volume. I thought, geez. So I didn't even bother to turn it on. But I turned it on the close, and it got long at 53. And it also got long in the Dow, and I made $7,900 in that on one trade right into the close. That was a nice little trade for the day. But you have to pick your spot carefully, and these pullbacks have been pretty. If you put up a trend line, they've been pretty. One of them, see. Finding the pullback and getting in. This was right here was this 41. This pullback here at this 41 that's retracement back to get in for this move here, because from there it's moved 20 points. And you just can't get scared when it starts going down. I didn't fail back here. I didn't get scared when this market started pulling back. You can't be a security cat. Now, these are all really good if you're a counter trend trader. These are all really nice little counter trend trades. And when I was in the pit, we have a trader in the pit. His name was Matt, and Matt was a short seller. Matt would not buy the market to say the price. The only time he would buy the market was when he was getting out of the trade. And so he was like a barometer in the market and in the pit. Because what happens is when the market's selling off with these pullbacks, it's really thin. So a lot of times it moves very fast. And so there's these people that are counter trend traders, they make money really quickly. And he was like the best. So whenever Matt would get out of the trade, we knew that's when we wanted to buy it. We didn't do every trade, but we would always buy him drinks after the market, because he was really good at it and was a really good counter trend trader. And but we also knew that if Matt got run over, it was time to buy it. And then that day we would buy him a lot more drinks. because you didn't make any money that day. But, and you know, you can make money either way in the market. You, as a trader, what you have to do is you have to find something that works for you. And you have to become really, really good at that one thing. And that's one of the hardest things for traders to figure out is what am I really good at? Because, you know, somebody may be a really good counter-trend trader, but everybody has a different kind of personality. Everybody has a different kind of risk tolerance. Everybody has, what's going on? What's happening here? What's happening? Am I doing something?
Absolutely. The market really does reward the specialist, and don't try to get good at everything. Don't try to follow everybody's trades. Find what type of trading works for you, and become the master of your own system.
Correct. The thing, like Stephanie, when Stephanie and I first met, literally, I was like, oh my God, she and I had such synergy. I had never met anybody that traded exactly like I traded, because I trade, you know, when I see, I don't have a retail fee. I have an institutional fee, which my volume is completely different than what you guys are seeing. But in any event, and then I have a program that kind of gives me some secrets on, as almost dead. But anyway, but Stephanie, I was like, I mean, literally, she and I were like, it was amazing. And I just would private IM her because I didn't type anything in the room or whatever. And Stephanie doesn't charge me to be in the room because I have this experience and knowledge of the future, which is, you know, a nice compliment to all you stock traders. But so the thing is that you know, and they all move in tandem with each other. So you know, the SPY and the fiat are, you know, they're like the sisters. But what Stephanie teaches is what you should not deviate from that. You should stick with that because it works. You know, because it takes out that element of thinking, oh, the market's going down when it's clearly telling you the well above all of these trends. Why should you try to, you know, scare yourself out of a trade or scare yourself into not taking a trade? Like, you know, if you see this market coming down, you might be scared, like, oh, it's over. Where you should be buying it right there. You should be buying those 48. You should be buying those 53. You should be buying those 41. You know? And these are all nice little pullbacks. I got a great story. I got to share with you. Oh my gosh. Okay, so when I went to work, after I came off the floor, I went to work for the brokerage firm, and I went to work for Linda Raschke. And Linda Raschke is, oh my gosh, she was written up she was one of the market wizards. I mean, literally, everybody in Chicago knows Linda Raschke. She lectures all over like Stephanie does, and she's even lectured in like 12 different countries. She's a big trader. Anyway, so, okay, see you, Valerie. Anyway, so she, so that's why I met Jack. Jack ran their IT department, and Jack was building the front-end platform for her firm, and I was a switch-on trader. And it's just like TradeStation or, you know, any of the platforms, TD Ameritrade, or whatever all of you use to trade. Same thing. It connects to the exchange where you place your trades. You got your charts. You got, you know, all that stuff. Anyway, so and they allowed their brokers to trade their own money, but they didn't want to like trading all day, you know. So I found, and I was on the phone, you know, all the time. So I really couldn't trade the way I wanted to. Like miss trades, and I was like, dang, I should have locked out, or should have sold out, or whatever. Anyway, so Jack also built automated trading systems, and he said, Angel, I'll build you a system where you can turn it on during the day, and so, you know, turn it off whenever you want. I'm like, oh my God, that would be so awesome. He goes, yeah, just give me your specs. So we built out this nice little automated system. It was a simple system. It was nothing fancy. Anyway, so I was in his office, and he told me it was ready. I said, let's do it in the afternoon. We'll just do the afternoon session and test it. So I went into his office and turned it on. I'm sitting there going, is this thing working? It's not doing anything. Is Jack working? I said, I was looking at it going, man, there was a trade there, there was a trade there. Why didn't he take a trade? Anyways, all of a sudden, it got lost. But he was actually adding a feature to the position reporter in Photon so he could see all of Linda's trades. And as soon as my system got long, and I was just a little free lot, he goes, oh, God, Linda just sold 20. I bought 88 quarters. She sold 88 half. And I was thinking when I saw that trade, I'm thinking, geez, maybe this thing's not working. Maybe we should run it on the sim before we turn it live. I was a little nervous. And he goes, no, just leave it on. And then the market starts moving on. And all of a sudden, Chase puts on. He goes, oh, my God, you just sold another 20 lots. And then the market keeps going up, and she sells another 20 lots. Going into the close, she is short 200 E-mini and down over $200,000. Now, I personally would have been throwing up out the window. But anyway, the market goes into the close. She puts on another 20, and all of a sudden, right at the close, the market dropped. She scratched that trade. Holy cow. One of the best trades I think I've ever witnessed in my whole life. I mean, that takes skill. That takes huge skill and huge balls to trade that. I would have been throwing up out the window. But what I'm saying is there are all kinds of different traders. There's all kinds of different ways to trade this market. You know, you have to find what's comfortable for you. And what, you like trading the trends. You know, there's times when, the market's fuzzy and there is no trend. And it's okay to sit on the sidelines. You don't have to always be in the market. But if you follow what Stephanie teaches and keep that discipline, you're gonna make money, but you can't get distracted. Like when her little 20 lot came in, because I know Linda's a great trader. I was second guessing my trade. You should never do that. I left it on and made money that day. And as a matter of fact, she and I went out for drinks later that after the market closed. I didn't tell her that I was watching her trade. But she goes, well, how'd you do the dude? Oh, yeah, I made like $1,400 or something. She goes, oh, that's good. She goes, I got this nasty trade. She goes, but I scratched it. I go, oh, good for you. I'm like, boy, did you get in a nasty trade? But, yeah, so you can't, you have to find, and you have to have that method. Because if you're just following somebody, what if that person gets run over by a bus? How are you gonna support yourself, and how are you gonna support your family? You've got to do this for yourself. Hello?
We're here. I'm listening. Anyway. Well, I know for me personally, having gone through a automotive accident, there have been times that I am flat on my back and cannot move, and so I intentionally put on trades that have inherent low risk so that if I'm not there to close the trade, it's not a big deal. It's not going to wipe me out. Because I've structured my options trades to where my max risk is very small on every single trade for the most part that I put on. Other than, when I'm actually sitting in front of my computer doing a day trade, I'll put on something that does have higher risk if I were to be struck by lightning. But other than that, any overnight positions, any earnings trades, it's a very small risk to a high reward potential. That's the only type of trades I'll take. Because there have been so many times that I was not able to go physically close a trade. And, I've got instructions with my broker that if I'm not there to close the trade, this is how I want a spread trade to be closed and things like that.
Yeah.
So.
Well, that's good. That's good. Yeah. Yeah, because you just never know. Yeah. I have, with my brokerage firm, if I lose so much money, they just automatically get me out. I'm down. And everybody should have that as a precaution. if you get caught and something happens, just, and if the market has huge volatility and you haven't stopped it, you may not get that fill. It may be a lot lower than you think than where you're going to get sold at. I mean, on 9/11, Jack was trading, and he lost 20 grand that day. He made it back in like a week and a half, but he lost 20 grand because nobody could get billed that day. The market went straight down. But yeah, you have to be, and that can happen. I mean, we could get a rocket go off, and this market could swap straight out of the sky. I mean, that's a risk. That's a real risk that could just take this market straight down, and nobody knows when that's going to happen. But it's something you have to be. I've been posting that. This is a huge black swan, and if we go to war, then the market's going to have volatility is going to just jump. So you have to be prepared for that.
Well, thanks, Angela.
And
really appreciate this.
You're welcome. I really want you guys to Stephanie, what she teaches is it's a way to trade. It's a really good system, and don't get caught up and try to deviate from it. If you follow it and track it yourself, write down those levels in the stock, and keep track of them. Put them somewhere. Have a journal where you keep all of those levels. And if I give you a level, I'm not gonna. Here's the thing. When I tell you a number, I'm not going to tell you every 5 minutes, if the market's going up and down. Because the market is an auction, and it does that all day long. You do not need for me to tell you every 5 minutes that the market's going up and down. Hopefully you're smart enough to figure out what's going on. But what I will tell you is I'm going to give you a price, and you need to be able to watch the price action around that level. And it can come back to that price. It might even wiggle through it and come back up to that price. Here's a good example. I gave a level in the bond of 152.27. And that was right before the CPI number on Friday. And so, anyway, and I was just short. And CPI affects the interest rate. They can have these big swings. So I didn't know. It's So I actually got out of my store after the close, or on the reopen. I got out. I didn't buy it because it was going in the CPI. You don't want to risk because you just don't know what that number. They were predicting a really good inflation rate for the country, but it missed. Which means that Yellen, there's a likelihood she may not raise rates in December. She may not. It's such a head game. It just makes my head spin thinking about how many times they played this head game with us. But in any event, so I had that. And I said, but what I did say was that it had to trade below 152.23 to tell me that the selling is still intact, and it never did that. It just kept going up, So anyway, that 153.29, it took a while for that trade to set up, but the bond eventually sold off. You have to be patient sometimes with the setups on these things. It's not like, there's the magic number and the market's just going to magically react off of that. It may take some time for it to digest and get its footing. So, but you have to know how to read that price action. And it's the same thing with Stephanie's stock. She and I trade, literally, we're like sisters. We're like identical twins. I remember when we first met, she's like, I can't believe there's another, I can't remember what we said, Stephanie. It was just kind of funny. But it was just really nice meeting somebody that traded and had the same philosophy and the same trading style, because there aren't too many people that do this. They tell you to trade the support and resistance, or they're trading an Elliott wave, or they have market profile. I mean, everybody has a different way of trading the market. And I've never met anybody that had the same system of trading that I did. I was so excited. And I love love you, Stephanie.
Ditto, ditto. I don't know if she's still listening or not. Charles, real quick though, colors are just whether a trade went off at the bid or the ask or below or above or in between. And basically the biggest thing is to not get hung up on the colors, but what is the stock, what's the price action doing right now afterwards that is telling you, obviously if we're above, there's still buying going on, if we're below, they're selling. And so don't get hung up on the colors. Okay, Charles?
If it's red, that means they're buying it. And if it's green, that means they're selling it. It's on the bid or it's on the offer. Because it is counterintuitive.
Typically, right, but when we get late prints, though, a lot of times they'll do it against current pricing, and it gets really confusing then. So.
Yeah, but when they're trading on the offer, like it's an auction.
Oh, sorry,
So
Susie. Never mind, I'll shut up. Okay.
It is very counterintuitive, and it's very confusing because people see the green and they think, oh, green means, buying, and they think red means selling. But what happens is when it's an auction. So when I place my bid gets filled when a seller comes in and takes my bid, and that's done on the seller side, on the offer side, on the offer side. I'm coming in, the seller's coming up, on my price, but it's done at my price, but it's done on the offer by the seller. The seller's listing my bid. And then vice versa, when you're selling it, it's coming in, on the bid side's taking out that price. So it's posted on bid, but it's posted, it's the opposite of what you think, and it is confusing. so do what Stephanie says and ignore it.
Well, there's so many times I'll be buying, I'll be getting long in options position sometimes, and I will get filled at the bid, and so having experienced that personally, when I'm going through and looking at UOA, and sometimes I'll see something go off at the offer or at the bid, I don't immediately just say, oh, if it's on the offer, it's got to be they were buying it, or vice versa, because, I'm not doing large 20,000, 50,000 contracts, but at the same time, I know that I buy on the bid and sometimes sell at the ask, depending on who else is there to take the other side of the trade. So you can never assume. That's the thing with the market is never assume. Once you start assuming, as Stephanie says, you are putting your own ego into the trade, and that's going to be the ruin of you if you just start assuming and as Angela said, predicting what the market is going to do. You cannot do that. Watch the price action and follow it.
Nobody knows. Here's the thing. They used to have, I thought it was something I want you guys to watch. Let me find it. Here it is.
This is kind of fun. I've never done this before.
I think everybody should watch this documentary. And it's about the crash of 1929. I think everybody should watch this because they basically got caught manipulating the market back then. And supposedly there's all these regulations that are in place that will never happen again. Yeah, it's still there. It has never changed. It used to be they had envelopes. They would send the envelopes from upstairs down to downstairs to the floor. But now they have all of these high-speed computers and algorithms to do it once. They can do it under the cloak of darkness. So it is totally still manipulated, and it's totally been still doing. They're still doing the same thing that they did back in the 1920s. But I think everybody should watch that video of the crash of 1929. if you're a trader. I just think it's a great way of reaffirming what we all know. But it's actually an interesting documentary by the PBS. Does anybody have any questions?
Anybody? I'm going to have to run pretty soon. But let's
Okay.
definitely get your technical problems worked out so that you could give us some more presentations.
Yeah, I don't know why the mic. I mean, I think
We'll get it there. I mean, I had a lot of problems at the beginning too, and you know, what it comes down to, Stephanie makes it look easy. And I know I've had my share of technical problems with Novia and everything, so we'll get you up and going.
Okay. Well, you guys are welcome. I love you guys, and I care about traders. You know, I have to say, when I would do my equity run, at the end of the day, when I was a broker, I would always say a little prayer, please let them all win. You know, because I care. Because when you put your hard-earned money to work, you know, you hate to see people lose it. And I'm going to tell you something. As a broker, when you're hearing people actually losing their life savings, which I had seen, is something that you just, you know firsthand how hard that is. So I'm not going to give you a recommendation out of the blue, pull something out of my hat for the heck of it, because I know you've got money on the line, and I know, and I care. I really do care. Stephanie knows that, and so. But I can't tell you where the market's going to be going, but I can you could trade off those levels like 70, 60, 70 cents. And as far as today, I will tell you, I saw something interesting at 57 quarters in the S&P, so that sparked my interest. And so I'm going to keep an eye on that 57. So I think that would be a good level for you guys to just, keep on the radar and see what happens. I mean, there's nothing earth-shattering there, but it's just one to write down and take note of.
What was that level again?
57, 25, 57
Okay.
quarters.
Thank you.
But anyway, if I can help in any way, please feel free to private IM me at any time. I'll answer any questions. If I don't get back to you, it's because a lot of times I do not have the chat window up because I have a server in Chicago. I have 4 VPSs, which is basically like running 4 different computers, and I have 4 different systems running that I'm monitoring all the time. So I have kind of a lot going on. So if I don't get back to you right away, I'll be happy. Just give me time. I'll get back to you eventually. So, but anyway, you guys take care, and Ricky, you're awesome. You did a great job in the room.
Well, thank you.
And really appreciate you.
All right. Stephanie is traveling tomorrow, and so I'll be doing the morning meeting at 9. And otherwise, respect your money. Trade carefully, trade well, trade disciplined. And I think we'll sign off unless you have anything else you want to say, Angela?
I think that's it. And yeah, so I'll keep you posted if I see anything.
Thanks. You're a real valuable member of this team, so we really appreciate you, Angela.
Oh, you're welcome.
All right.
Take care, guys.
Good night, everybody. Good trading, good call-outs. Thanks for everybody's call-outs today, and see you guys tomorrow.